Hi everyone, this is DeFi Dad. Hopefully you can hear me. I'm gonna check the comments because this is first time I've ever done this. Can you all hear me? Anyone in the YouTube comments? Can you hear me? I'll find out here in a sec. Well, I'm going to assume that everyone can hear me. Let's see, loud and clear. Excellent. Cool. Well, this is going to be a show that we're going to try to do Monday, Wednesday, Friday. The idea is to, really give everyone a rundown of what's happening day to day in DeFi, what's happening in yield farming. Also, answer your questions. So I'm going to pay close attention to what's happening in the comments. Please ask questions throughout this, and we'll try to get to those. I really am going to use that to kind of steer how we use this time. And let's see. So just a heads up, I might have Nodar from our team, who's one of our co-founders of Zapper. And I'm going to talk through today some details about Uniswap. So that's been really the exciting update over the last week. They released a governance token, and given that Uniswap is one of the most popular DeFi applications, this is a pretty big deal, and there is opportunity to earn that token. There's also opportunity to claim that token. And I'm looking at the comments here. So great, it's all working great. Chris Black, my buddy Chris Black is here. By the way, Chris could join at any point. One of the cool things about the live streaming software I just got is it makes it easy to have folks come on screen. So I'm going to be a little cautious today just because I'm newer with this, and but over time I'd like to have some guests. So let's do this to start off. Actually, let's just start with a question. So Xenofon, whatever that is, one question was how to enter a vault via loop ring or not possible. If you're referring to a Y vault, which is yearn.finance/vaults, let me go and share my screen here. Let's see if this works. My Chrome tab. All right, here we go. Hop over. Hopefully folks can see my screen. And all right, I'm gonna just double check this once more. Actually, let me change the way I'm sharing this. Let's share just my Chrome tab. All right, there we go. Cool. All right, so if you're talking about Y vaults, these are ways to automate earning yield using any of the tokens listed below here. Some of these are liquidity provider tokens, but the idea is that yield farming in DeFi is difficult in many circumstances. It's a lot of detail to keep track of. It's knowing which applications to hop into. So it makes a lot of sense to automate all of that so that more people can participate. And so long story short, this is where they have been traditionally listed. It's worth coming here to look at the performance of those vaults over the last 3 days, 1 week, and so on, because this is estimated annual performance. And so let's look at it based on the last 3 days, just because the markets have been really volatile and tokens can go up and down in price, and that will ultimately affect the performance of these vaults. So if I were to check out, let's say, the Curve YLP vault, this is commonly called YUSD. It's stable coins inside of Curve that are also being used here to yield farm, and it's earning about 12%. So I could come here and I could deposit. The convenience of using Zapper is the fact that if you hop into the Invest tab, you don't have to be a wizard of knowing where all of these applications are. So I'm going to hold on a sec. I'm going to switch tabs. Share my screen again. Which tab is it? Here we go. There we go. So in Zapper, if you go to zapper.fi/investor under the Invest tab, you can see here an example. I have $101 of YUSD in the Y curve vault, and I can add more liquidity to that. I can deposit one of the stable coins that is used in that pool, like DAI or USDC, or I can also even use a token like Ether. Zapper will just automatically swap that out for me, and it will create the right proportions of those stable coins so that I can start earning with this Y vault. So anyways, long-winded answer to the fact that you want to go to the Invest tab, and then under Explore Opportunities, just search Yearn. This will show you all the different Y vaults. All right, let me go stop share. Okay, we'll just leave my screen up right now. All right, next question. What do you think about NFTs in general? Maybe say a few things about what they are and the full potential. People think it's just about memes and the NFT related farming insanity. Yeah, good question. I really like NFTs. They're not okay. So first off, NFTs are non-fungible tokens. So it's the ability to mint something that is like one of a kind. And so this works really well in the art world. And so digital art has been really popular. I have mostly paid attention to digital art that is really popular in the CryptoVoxels community. So if you ever go to cryptovoxels.com, it's a 2D VR community, as in like you just can check it out on your screen. And then you can display that digital art, which is, NFTs powered by Ethereum. You can display that in that VR world. It's a really cool way to share art. So that's one application that's exciting. The other one, though, the one that's actually gotten a lot of attention is, let me show you there's meme. Everyone has been talking about this, and I want to just quickly show you. Let's share my other tab. Maybe eventually I'll get better at this. All right. So the idea behind meme was that it started out as actually a joke, making fun of the way that people were acting really manic about trying to earn with yield farming. So that group, I think it was a Telegram group. This is like weeks or months ago. And this is something I wasn't really a part of. Actually, hold on a sec, guys. I just want to switch wallets here. Give me just a sec. That way I can show you a real life example. Okay, here we go. Back to sharing my screen. There we go. Chrome tab. All right, cool. So anyways, the idea behind this is it's yield farming, providing liquidity, staking something in return to have access to limited edition NFTs or art. So if you take a look here, one of the first things you have to do is, they say don't buy and don't farm. It was, again, part of this meme that got meme going, was saying that this was all kind of silly. And then what happened is a really great product person behind it, Jordan Leal, I think that's how you say his name. Jordan decided, based on the community's feedback, that they would actually build a product. So the first thing you need to know is that there are different pools in meme. So there's the Genesis pool and the LP Genesis pool. Both of these are just different pools of art that you can claim. So if I go to the Genesis pool, this is where I can stake up to 5 meme. So I cannot stake anything more. Be aware, meme has become rather expensive, I think probably due to the excitement around this and probably a lot of speculation. But what you end up doing is you can stake up to 5 meme, which I've already done. Meme is the token. So meme is kind of, it's really all you need. If you have a quarter of one meme, you can stake that and you will earn a quarter of a pineapple every day. The pineapples are just credit. And at the end of the day, for staking your pineapples, or I'm sorry, and earning these credits, which are called pineapples, you have the ability then to mint any of these funny memes below. So for example, this one is worth 10 pineapples. And so I could go here to redeem that, and it'll just take me through a MetaMask transaction. So that's how meme works. I think a few other things to point out about it is really interesting that there are different pools, because it can be like a different series of artwork. And so the third pool that recently came out is by this artist, and there's all these different pieces of art that you can mint. And you'll notice that I currently have 23.74 pineapples. I don't have 30 pineapples to mint this yet. But the cool thing about it is I've got my meme, and I don't have to do anything beyond just staking it and then minting this art. So for those that really do want to collect art or think this is a fun, cool experiment, it's a really interesting project to follow. And it prevents whales from, it prevents a whale from taking advantage of this. If I have 23 pineapples in this wallet and 23 in another wallet, I cannot combine them. These credits are not transferable. So the most I can make at any one point, I can earn 5 pineapples a day with my meme. All right, back to this. Let's see if there's any other questions. Wow, win few. Yeah, I have nothing to do with few. That's an easy one. How do you get your earnings? That's an interesting one. When you use YUSD. Yeah, Garth, that's a hard one. Right now, I can tell you with Zapper, that's one of our most requested features. So we will eventually allow you to track profitability. The thing that I do is I can go back. Let me go back and share my screen again. I will go to transactions, and then I will search for, let's say, yearn. And then I can look up and see, okay, well, what did I zap, or when did I zap it? How much money was it? So it's a very manual process right now. And then I can take a look at, let's say, the value of what I've gotten here already and just subtract the difference. But anyways, long story short, that's a very requested feature. And tracking profitability is, aside from us doing it with Zapper in the future, I still keep a little trade journal, just because I think in DeFi, as much as I'd rather not move my money around as often, I'm moving it around very often. And I want to know, I want to remember, why did I invest in things? Because when I look back at my notes, I tend to say, okay, this makes a lot more sense, and maybe I'll stick with it, or maybe I'll dump it. All right. Let's see here. What's the next question? Oh, can you, by the way, going back to, there was a question earlier about Y vaults, whether you can zap into a Y vault on L2. Not yet, but it's a great idea. For example, Loopring, since it's, Loopring is incredibly inexpensive to trade on. If you go to loopring.io, you can trade for some days a fraction of a penny. So that's verifiable. I do it about like once a week or so. And it has everything to do with the fact that Loopring uses ZK rollups. And anyways, long story short, the limitation is just that my account, which is registered to my Ethereum wallet address, I have to deposit into my Loopring account. And then once I'm in it, that's the ether or gas that I pay. Once I'm in, I'm not paying anything additional. I'm paying 0.06% in taker fees. 0% in maker fees, and again, the gas is a fraction of a cent. Like I normally can't even calculate it. Let's try to skip ahead here. Is it profitable? Let's see, minimum stake. Oh, thanks, Tommy. Okay, minimum stake is one meme. Okay, so if that's the truth, just be aware that in order to stake meme here, you have to have at least one meme. One meme today was floating between like $700 and $900, which is a lot of money for a lot of folks. So that's something to be mindful of. Let's see. Is it profitable? Oh, Deliana was asking, is it profitable to stake meme and then to mint art? I think that's what she's asking, hopefully. And if you are referring to meme, I don't know, because it's very dependent on what people are paying for that art on OpenSea. So many folks are minting art here. They're having fun with it, staking the meme, minting the art. But then if you go to OpenSea, there's a lot of listings of these. Now, currently, there's none of these new, this one here, the volatile pineapples, or the meme shitcoin cycle, or the crash test, which is 60 pineapples. So there's that could change. Some of these, though, have gone for over 50 to 80 ETH I've seen on OpenSea. Not these specifically, but some rarer ones that are part of the Genesis collection of art. Anyways, by the way, the reason I like this is just, I think it's really cool. It's like a way to have a stake in art that's being created. And in all honesty, I'm not quite sure I'll be reselling any of it, but I definitely will explore it. If someone wants to pay me 100 Ether for one of these, I'll probably sell it to them. Okay, let's see. I have 25 on your platform, but can't withdraw. Let's see here. Okay, follow up on Deliana's question. I have 25 Ethereum on your platform, but can't withdraw my profit because of ETH gas fees. Always asking for 200 plus. I know it's not your fault, but just, yeah. Gas is really, really frustrating. Let's actually talk about that a sec. Deliana, if you respond, tell me like what, if you're willing to disclose it on there, like what liquidity pool or what Y vault you're mostly in, because there are some like hacks to maybe getting out of that for less money. Let me share my screen again. Gas Tracker. Okay. Sorry, I'm just pulling up the Ethereum Gas Tracker. Let me go ahead and reshare. Okay. So for anyone who's less familiar with gas prices, just know that the cost to get through your transaction on Ethereum is related to an auction-like process that takes place. When you go to confirm a transaction, if you've never noticed this, MetaMask will recommend how much you should pay, like how high of a gas price. And that combined with however much computation is required, that comes up with a total, which is like the maximum amount of money you end up paying. And these gas prices are up a lot. Like 6 to 12 months ago, I think 6 to 12 months ago, I think I remember 10 Gwei being a lot. So these are like, at this point, the average gas price right now is 15x of what I was paying. And that just means that you're paying a lot for individual transactions. So the way to try to beat that is anytime you go to confirm a transaction, always open up the Etherscan gas tracker. Also, you can check ethgasstation.info. It's just another resource. I check it to see what is required for me to get it through here in less than 10 minutes or less than 30 seconds. I choose something in the middle. If I'm more patient and I'm willing to potentially get stuck and have to unstick the transaction later, I will maybe like choose something closer to the lower end. But just know that these are constantly fluctuating. So that just went from, that was at 70, now it's up at 144. For someone who put through a gas price at 144, they're stuck now until gas prices come back down. That's why you see transactions get stuck in pending. There's a few hacks to this. Let me share a different screen. So I just made a video for Bankless YouTube on Monday. And if you go to Bankless tutorials and Bankless YouTube, you will find that this Y curve vault, which is really, really popular. It's got a lot of money in it because it's just easy. You put USDC, DAI, True USD, or Tether into it. And in terms of the annualized percentage yield, it's been anywhere from like 10% to 40%. So, when my digital dollars are earning 10 to 40%, I'm a pretty happy person. And so if I come to Zapper under my current investments, and if I were going to withdraw this, let's pretend I was going to withdraw this back to, oops, there we go. Let's withdraw it back to like DAI. I'm going to get back 101 DAI. If I click confirm, you're not going to see this MetaMask transaction. Oh, there we go. Actually, you should be seeing it. Hopefully you can. Guess I'll find out later. You can see that it would cost me $84 right now. Now that's the maximum price I'd pay, but that's absurd. Why would I pay that much gas to pull my money out? I've only got 100 in there. So this is kind of the problem that Deliano was, I think, referring to. The hack to this is if you go to the exchange, choose YUSD and choose, let's say, DAI. So here's the same balance, the 87 YUSD or Y curve vault. They're the same thing. They get called different names in different circumstances. And so if I put that in, I can get 99 DAI. So the rate isn't as good as what I'm paying if I withdraw through the Invest tab, through a Zap. If I zap out and go the usual process, I get a little bit better of a rate, but I also pay huge gas fees. So long story short, I did this on Monday and showed that I paid about 25% of the fees. So just be aware, this is a hack to it. This is a way that you can get out of the Y vault back into DAI. I think that we'll probably see more of this in the future, where you have swaps that allow you to go from the yield earning asset, like the Y vault, and then you can go back to this asset. And then one last thing on that is, let me just show you Cream.finance. They also have an application. All right. Okay. Oh, sorry, I'm gonna reshare that. Here we go. All right. So when I'm in Cream, this is a fork of Compound, and they offer lots of exotic yield earning assets. So here's that YUSD, also called Y curve. So yeah, it's another way for someone to say it. Actually, let me take that back. Here it is, YUSD. This is refers to a different form of it. Anyways, if you go to the swap, they have a swap where you could go from, let's say, here it is, YY curve. There it is, my 87.256. And I could go to, let's swap it for USDC. So this is yet another way for me to do it. And this is also a swap that will eventually implement into our DEX aggregator on Zapper. So what you were seeing previously under zapper.fi/exchange, that will eventually incorporate, any liquidity pool that has audited code and is liquid is something that we aim to implement. All right, let me double check here if anyone else has joined. Okay. You started with you, so kind of went to questions. Yeah. Good point. Yeah. Why don't we cover Uniswap a sec and where they're headed, where we're headed in V3. Okay. So the question is, you started with Uniswap and kind of went into questions. Can you speak more on Uni and where they're headed and V3? Yeah, I can quickly cover that. So let's share this tab. Okay, so Uniswap released their own governance token. I think the total supply of it is 1 billion, which is a lot. That's going to get released over the next 4 years, and then eventually they'll continue to issue Uni. So it's a continued inflation model, which I actually thought was a really clever move because everyone's been doing capped supply, and Uniswap is just such an important product in our space, and it has so many users and it has so much loyalty. So I think it makes sense that they should be planning for the future like that to continue to issue rewards. So anyways, at the end of the day, Uni, the power of Uni, like all these tokens, is that you have a voice in governance. And currently, the thing that really got really popular is the fact that you could claim Uni. So this account that I use, I had traded on Uniswap previously. And so I went to app.uniswap.org. Make sure you don't go to uniswap.com. That is potentially someone malicious owns that. I don't know for sure, but I think uniswap.com might become could be a risk of getting phished. So anyways, if you go to uniswap.org, you can click claim Uni. And then this is where, if you have your Ethereum wallet connected, if I hadn't already claimed my Uni, it said you've got 400 Uni to claim. So any wallet address that's ever traded on Uniswap was awarded 400 Uni. It was a big, nice surprise. There's a lot of folks who have traded with different wallets. That means each and every one of your Ethereum wallets has a credit of 400 Uni. There's no time limit on this. It's per usual. This is baked into being attached to your wallet address. So it's not like anyone else can claim it. Even the Uniswap team shouldn't have a way of taking that back. And so anyways, if you go there, click on claim, it's one transaction. The other part of that equation then is moving forward, you can earn Uni across these 4 pools. And so Uniswap is incentivizing all of us to provide liquidity, and in exchange, they're paying out 583,333 Uni per week. And that is, that's what, over $25 million based on a $5 Uni price today. So it's a lot of rewards. Each one of these pools is potentially worth that. It is dependent on the price of Uni holding there. So obviously a reward becomes worth less if the price of Uni drops. And all you have to do, if you're not already on Uniswap, is on Zapper, if you go under the Invest tab and you go here and just look up ETH, the 4 most liquid pools are the ones that are listed. Oops, let me reshare my screen. Shit. Share. There we go. Okay. So what I was showing is I'm on zapper.fi/invest under Explore Opportunities, which is where all of the liquidity providing opportunities and Y vaults are. I looked up ETH, the 4 most liquid pools, which are anywhere from 300 million to 400 million in liquidity. These are 4 pools that I can consider zapping into and adding liquidity. The little tractor icon means that after I add that liquidity, I will then be able to go to the next step, which is staking. So if you are on Uniswap and you deposit into one of these, after you do that, you would then have to go through a step of staking the liquidity provider token. it's like an IOU. You always get an IOU when you provide liquidity or you do anything on Ethereum like that. And so anyways, if I were to zap in, let's say like 1 ETH here, I will run through one transaction. So it's a single transaction because it's Ether, so I don't have to go through an approval transaction. And then after that, I have it'll be 2 transactions. I will give approval and then stake it, and that's it. And then I can track how I'm earning uni in my dashboard. Unfortunately, I actually haven't done this yet, so I can't show you that live, but just know this. I haven't done it myself because I did just, some like quick math on my calculator and said, well, if I put in, let's say, this isn't the real number, but let's just pretend if I'm going to put in $1,000 into this DAI Ether pool, that is 1,000 divided by about 300 million. And then multiply that by, let's see, what are the rewards again? About 583,333 uni per week. So I could be earning about 1.94 uni per week in this pool if I add liquidity. And that price of uni being $5 today means it's about $10. So for me, the question of do I want to earn that with, let's say, $1,000, it just didn't really make sense to me right now. There's a lot of liquidity competing to earn rewards here. That being said, make your own decisions. It's not financial advice, just how I thought about it. Okay. Oh man, we got lots of people joining. Let's see. Bitcoin Louis in the house. Let's see. Sorry, I'm just looking over the questions here to see what else is here. Thanks. These are great questions too. Let me know too, feedback wise, if you like the way I'm running through these things or if I should be less long-winded about it. Let's see. Someone asked, Webby459 asked, what's the role of add in Zapper? Does that save gas in positions we already hold? Good one. Let me just quickly cover that. Okay. What he or she is referring to is if I were to zap into one of these pools, the idea behind a zap, if you're not familiar with it, is that if I went to Uniswap and I were to provide liquidity, the way it works is I have to provide a 50-50 provision of Ether and Tether. So that means I have to prepare that in a 50-50 provision, or I just have to have enough on hand, and then I would deposit that. It is kind of a friction point and an inconvenience to have those 2 assets in whatever ratio. So what we've done, what was enabled back in November 2019, the team created this. Zaps allow you in 1 to 2 clicks to enter liquidity provisions, and it kind of does all of this, all of these transactions, this manual work for you. So it makes it easy, to participate in DeFi in a few clicks. So if I click add liquidity, all I have to do then is choose one of the 2 tokens, so Ether or Tether. I also have the ability to zap other tokens that are more liquid. These are a few examples here. So these are, USDC is not in the pool, but it's so liquid that we will swap USDC for Ether and Tether. So you could do this and you could, basically go from USDC to a provision, a 50-50 provision of Ether and Tether. And again, like, what's the point of that? It's because you want to make it as easy as possible for people to participate. It makes it more accessible for people to become liquidity providers. And at the end of the day, liquidity is really important to the growth of DeFi. All right, let's go back. Bitcoin Louis. Actually, Christopher had a question back up top regarding being an LP. The only way to not be subject to impermanent losses for the pair in the pool to increase in value at the same pace. I believe so. I tend to always, I think this is the same thing as saying the price doesn't change between the pairing. So ideally, 2019 was a really interesting year. I was never like a large liquidity provider in Uniswap, but I did take part in a few pools. The reason it was so interesting is that when you're a liquidity provider, volatility helps you to earn more trading fees. You know, if you're a market maker and every time someone trades at 0.3%, you're earning more the more people trade. Well, when do people trade a lot more? When the market is volatile, when it's going up and down really rapidly, there's a lot more action. So that being understood, that's good for you as a liquidity provider. It also sucks if the price goes up really quickly or down really quickly if you're not prepared for it. So a good example is this. If I am in the ETH DAI pool and I provide liquidity, if I put in, again, it's 50% Ether based on the price of Ether, 50% Tether based on the pairing of the two. And then let's pretend Ether skyrockets in price. It doubles in price in a few days. I am selling my Ether to traders. The market is going upwards and everyone is buying my Ether. That's why it's a service that I provide as a market maker. That could suck. You know, like if the price gets sky high and I look at my provision, it's going to be more lopsided than when I first put it in, and I'm going to have less Ether. Similarly, if the price were to tank, then I'm buying Ether because everyone's selling me their Ether on the way down as a liquidity provider. So that's what's referred to as impermanent loss. Impermanent as in, I guess if I waited and the price went back up to where it's at, I could recover, back to my original provision plus the fees that I've earned. So it's something to be aware of in a very volatile market. This is why a lot of yield farming programs incentivize liquidity providers, because the quicker and faster the price goes up, the more it can potentially hurt those liquidity providers. Okay. Just bought this Matic network at... Yeah, sorry. William had a question about the Matic price. I don't have any feedback on it. I tend to just live in like using DeFi. Also, too, I'm going to try to do something revolutionary on this. I'm going to tell you when I just don't know the answer to things versus, bullshitting. So let's see what else we have here. There was a good question about Cream, and I think on Binance Smart Chain. Garth asked, I see Cream is on Binance Smart Chain, and there are other chains like XDAI, and transactions are super cheap and fast. Do you think the future there will be more of the platforms like Zapper on other chains? So I can tell you that right now we're clearly focused on Ethereum because it's where all the action is. But I personally believe in an interoperable future. I do think that Ethereum will be the largest landmass in that future. I think there's just too much that's been built already, and there's too much developer activity. It's just hard for me to envision people migrating away. That being said, I think it's really cool when teams are experimenting, and Cream has done some really cool building on Ethereum. I think it's really interesting that they're also trying to provide services on Binance Smart Chain. So I have no exposure to Binance Smart Chain or Binance token, but it's whatever. Take it for what it's worth. XDAI I've used to test products, and I don't know for sure the limitations of XDAI, but my understanding is just it's difficult to be decentralized, to provide the best security, which is something that Ethereum has focused on, security and decentralization, and then speed or throughput, whatever you want to call it. That's like the third piece of the triangle. And my understanding is that XDAI is great with throughput, but I believe it's considered to be a very, very centralized network. So anyways, that's what I know about that. Oh, and for what it's worth, I think a lot of people are going to test on XDAI at least. I definitely, I just saw PowerPool do that. Thought it was really cool. I spent like a fraction of a penny to test something, and I thought that that was really, really interesting. YUSD equals, Tommy was saying YUSD equals Y curve, which sells the farmed curve and adds it back to your what? Okay, never mind. That's not a question. Bitcoin Louie. My friend Bitcoin Louie's here. Let's see. Uni is going to $100. Yeah, maybe. Who knows? Let's see. This is awesome. That's great. Thank you, Mike. DeFi Dad, what's the best coin to farm, best percentage wise? That's a good one. So I'm going to always try to stay away from recommending and like unintentionally endorsing things on this show. But if let's think about it more scientifically, like the numbers. One of the places I always go is, let's share another screen. Here we go. I do tend to go back to the Y vaults. I think that these Y vaults, which are accessible under zapper.fi/invest, but the reason I come here is I look at the performance, or the yearly growth, which is the performance. And ever since they added this, it's meant a lot to me to be able to check what is the most updated or estimated annual percentage yield or yearly growth. Because the markets are so volatile, I mean, especially in crypto, I think it's important to check this over 1 week and 3 days. Normally, longer time frames mean more. You know, I would rather look at a chart over a longer time frame. I don't want to judge what's happening in the market myself based on a short time frame. But this is kind of different because I think in this case, if you look at estimated annual percentage yield since inception, check this out. If someone was getting into the YETH vault today, 12.39% is what they would estimate based upon the inception date of these vaults, which is only like a month or two ago. And then the Y curve LP token is at 68.54%. You know, these are really big numbers. I mean, 68% is hard for me to turn away from until I check it over the last week and I realize, hey, still not a number to turn away from, 15.73%, but it's not, 60, 70%. Notice the Ether pools, it's earning 1.05%. And by the way, I actually think this is a good thing because these rates were so high on Ether that there was talk of like, would people forego staking for proof of stake because the yields were too high in DeFi or yield farming? And I think the answer is it's difficult to generate yield from Ether. So anyways, this is a great place to go. Make your own decision, of course. I keep it really simple. I just look at these and say, what do I want exposure to? What tokens do I have? If I have Link, right now I can go lend it on Aave. That gives me a Link. And then I can put it in here. And oh yeah, based on the past week. So that's good. Based on the past week, I'd be earning 12.66% annually. That's pretty awesome to me. Link is a whatever. It's a premier token. It's one of the more liquid tokens. It's one of the biggest projects on Ethereum and in DeFi. So this to me is a really interesting one to take a look at if you have exposure to Link. Okay, what's next? Thanks. Elias said you are doing great so far. Thank you. Let's see, great explanations and demo. I'm digging the live tutoring. Bitcoin Louie, my friend, he's just gonna have a big ego by the end of this. How can you farm profit in a down market, riskier pools? That is a hard question. Let's see how to think about that. How can you farm profit in a down market, riskier pools? Okay, so I can answer one part of that. I personally don't think that taking on more risk in a down market is a good idea. So I'll just state that very plainly, but it depends on one's appetite for risk. So again, I can't give financial advice, but I'm definitely like middle of the road. I'm probably very tolerant of risk compared to the legacy markets, but I think in the crypto space, like I tend to try to stick to major opportunities on platforms that have been around. I'll test everything, but I don't YOLO into new opportunities. Like, for example, I do have some exposure to meme. I thought it looked like a lot of fun once I understood it, but it's a very, very small amount of exposure, like less than 0.5%, less than 0.25% of my portfolio. But that's just me. How can you farm profit though in a down market? I think in a down market, I think what interests me the most is stable coins, because I'm holding a stable coin, so my asset isn't depreciating in value with the falling prices, and I'm earning whatever I'm earning is better than earning nothing, and that's where I go back to these Y vaults. So that's one opportunity, but this is new. These didn't exist during the bear market. I think another strategy, one that I abide by, is just accumulating while the market is down. And so for me, I'm always long Ether, and so I will focus on accumulating Ether at a low price. And if there's other tokens that I have a strong investment thesis about, so that is where let's go back to Uniswap. Here we go. Shared. Okay, so if I'm going to be a liquidity provider, and if I'm interested in accumulating a token, a strategy that I've used is I could simply look up the token here. Like let's pretend it's Link. Oops. So I've got Link, and let's pretend that the Y vault for A Link doesn't exist at this point. This is, to me, it's a really obvious opportunity where I have interest earning Link being used to yield farm in a Y vault. So that's obvious enough. Let's pretend that I have Link and Ether. If Link is going to be falling in price faster than Ether, or I think it will, I could add liquidity to this pool. And now as the price of Link is tanking against, let me go back to here. Cool, you guys can see it. Now as the price is going down in Link, I am actually buying Link, but I'm also earning market making fees. I'm selling some Ether for Link. Like maybe that's another part of my strategy. Maybe I want to actually unload some Ether because I want to get into Link at a lower price. So again, like you can turn, I have done this. I have turned the market working against all of us into like, okay, well, if my goal is to accumulate Link in this case, I'm going to use that and I'm going to get into a Link pool. Similarly, though, I've also avoided liquidity provider options or liquidity provider opportunities at times, because if the market is skyrocketing, I've been thinking, well, I actually want to remain exposed to, let's say, meme or Ether or anything else, and I don't want to be selling that to others. Maybe the market making fees and the uni I'm earning isn't worth it for my strategy. So those are all things that I think about. Let's see what else here. What is the best coin to farm? Do you have any inside info about the upcoming YETH vault strategy? Actually, good question. I don't. I did see today that Andre tweeted about like an upcoming V3. So that's Andre Kronje, however you say his last name, Cronje. And it said it was incorporating like synthetics and Aave and some other protocols. So I'm sure there's something magical there, always cooked up. I have no idea though if it'll affect the YETH vault strategy. But 1%, I guess it depends. One thing I will point out on the YETH vault strategy is that The YETH strategy, it is exposing myself or anyone to smart contract risk. So it's not like I've just put my ether in there and like nothing to worry about. Just consider the fact that like these are newer applications and there could be a smart contract bug. And I would be questioning, is whatever the estimated yield worth what I'm risking? Because what I'm risking is potentially all of it if some disastrous bug were discovered. That being said, it is a very reputable team, and they have had some audits recently. So, or as far as I know, they have. Okay, so what do you like? How do you see the future of NFTs growing beyond just collectibles? I don't have an answer for that. That's a great one. What you should do if you're really interested in NFTs, by the way, is everyone... Oh, that's it. I have the option of showing these questions. Ha! Look at that. That's cool. Wow. I feel like a professional TV studio. I don't have an answer for this. My feedback, though, is you should follow Matthew from Cent. I can't remember Matthew's Twitter. You should follow the Token Smart guys. They are... Let me just double check and make sure I got that right. They're a group that supports lots of artists and NFTs. Oh yeah, Token Smart, at token_smart. Andrew Steinwald is another one. Andrew's Twitter is, let me see. Oh yeah, it's just how it sounds. Andrew and then Steinwold. Andrew Steinwald. He's a good friend who is, I just think, very forward thinking about NFTs. They all think about VR. All of these people have been thinking about VR forever. And the fact that we're all going to live in a virtual world, and that not only do you need scarce digital currencies, but you need scarce digital assets. Andrew has, I just like, if you ever want to like go down the rabbit hole, he's just got really cool ideas about the fact that I believe this too, that we will all probably be working in VR. Many of us will work in VR by the end of our lifetime. And it's so real already. If you've ever tried VR, it's just like incredible, the metaverse. And anyways, yeah, they've got some really cool ideas. So those are some folks I would follow. Oh, one last thing. Cryptovoxels.com, every Thursday at 3 p.m. Eastern, they host a WIP meeting, Week in Progress, I think is what it stands for. And they all meet in VR, and they speak on the Discord channel that is for Token Smart. And that's a really cool place to learn from all sorts of artists that are creating digital art. All right. Anyway, so, and then, by the way, Andre has some really great tweets on like the fact that like NFTs could be used for options, and it's also going to be used for insurance. So if you buy, let me show this. Stop sharing. Let me show you a different screen here. Nexus Mutual. So Nexus Mutual is a really popular place to buy DeFi insurance. It's properly called smart contract cover. Let me share. Okay, here we go. So let's see here. Actually, let me just switch accounts here so you can see. I think I have a live policy. Yes, I do. There we go. All right, let me reshare. All right. So Nexus Mutual is a place where you can buy cover. And so I could go and buy cover or DeFi insurance. And a good example, actually, so if you can see, many of these they're over capacity at this point. So this is so in demand, and we need more people who are holding NXM to stake. So if I go to, let's say, actually, let's see if we can find something here that isn't maxed out. Not really anything UMA is or UMA. Anyways, let's go back to my cover. So I have a policy here with synthetics that I had bought. Let's pretend that I covered myself for 50 Ether. I paid this premium at the time. This covers me from August 7th through October 6th. What happens if I move my money or I move out of synthetics and this is no longer as valuable to me? If you were to create NFTs out of these policies, I could then go and sell it secondhand on, something like OpenSea. So it's a really, that to me is a really cool application of NFTs. And this is something that the Nexus team has been really aggressive in exploring. All right. Here we go. Pull together. Nice. They're here. Let's see. Good to see you guys. What do you like more, Y curve or Y die vaults? Here we go. Here's the question. I should start showing this. This is so much better. Wow, look at that. So professional. So yeah, good question. I just look at the numbers on yearn.finance/vaults and just see which one is higher. And then I'll judge it over the course of, I tend to keep these tabs open. Like my computer always has about 100 tabs open. I tend to look at these things and just kind of see which ones are performing better. And then I think one last thing is I just eventually, I just get into the opportunity because it's not worth killing myself over trying to chase yield and constantly thinking about the numbers that change daily. Okay. Could you please elaborate more on, here we go. Could you please elaborate more on arbitrage and how zappers can profit from it? So I'm not equipped to answer this, but I can tell you that I think a simple example of this is, let's pretend that I'm in a Uniswap pool. Let me go and share the Zapper window. Let's pretend that I think I can, oh no, here we go. So I'm in a balancer pool here. I'm in a balancer pool of SNX and REN. I could rebalance the liquidity. So rebalance your liquidity into a Uniswap pool. And so maybe I'm in an ETH DAI pool and I notice that Ether is at a higher price in Uniswap than what I have exposure to in Balancer. I think that's a really simple example of it. I haven't spent much time on this, so I'm not going to be the best at talking arbitrage, but I think it's fair to say like you really need to be working with large sums of money. Otherwise, the gas is probably going to kill any opportunity to make profits from arbitrage. And these zaps, like as much as like these are becoming more cost effective, a lot of the work that our team does in the background is trying to find creative and clever ways to save you gas. Because at the end of the day, we're not charging any fees on these. We're just, this is, it's a service that we provide. Everything that you pay is to the Ethereum network. So we are, to keep folks as users, we're just as incentivized to try to bring that gas price down. And anyways, that's as much as I can share. All right, let's see. Next up, DAI was one of the very few assets that didn't lose value on those really bad days in March, including ultra short. Yep, good. I like that comment. That's very true. That also too was a scary time because DAI became under collateralized. So it was actually selling at a premium for some pretty bad reasons, but DAI is in a much better place now. A great website to check out is, I think it's DAI Stats. Let me just double check. DAI Stats. Yeah, DAI, D-A-I stats.com. I can go ahead and show this. DAIstats.com. Sharing. Here we go, DAIstats.com. If you ever want to just like if you have a Maker loan, I think it's worth tracking this just because the health of DAI is important to Maker. And anyways, I just checked in on this, and what we've got 865 million total DAI. So I think that's the total here. I'm not sure what the out of 1.1 billion is here. Maybe that's the ceiling, and then that's how much has been created recently. I should have Mariano Conti, who is the former head of smart contracts there, created this. So you can see like how much DAI has been drawn against, in Maker, you collateralize USDC or the BAT token or Ether, and then you draw DAI against that loan. And that's what it's showing here. And then you can see the rates, which the most ridiculous rate of all is that Maker CDPs have a 0% rate. So, I mean, I could open up a loan and be paying 0%. Uh-oh. Let's see here. Oh, there we go. And you know what? I just realized I have run out of time. Wow, that went really quickly today. Hey, thanks for listening. I'm gonna go ahead and check out here. Unfortunately, I have to skip some of the questions. Keegan, I was gonna bring you on here. I'm sorry. I've got to head over to a meeting now. But anyways, we'll do this tomorrow. So we're gonna try to do this more often, at least like 3 days a week, and I'm going to try to get it on schedule to do at 12 p.m. Eastern. So I hope you found this helpful. Let us know if you have any questions in the Zapper Discord. And thanks for watching. So let me see if I can use one of my cool little videos to end it. Here we go.